today, where this is part 2 of getting audited. And in the first part, we talked about federal audit. We covered more than just IRS, right? In the federal audit side, we talk about DOL, and we also talked about SBA, because all of these pandemic related assistance and those could trigger the audit. So, but today's focus is on the states. So I will be focusing on 3 states: California, Iowa, and Minnesota. Those are the state Community CPA has branch on. So we actually have clients, more clients on our book are from those areas. So we cover that right here. And no responsibility disclaimer, so important, because can you believe that we even, I even got a call from somebody from somewhere, and was watching our videos that is at least 3 months outdated, and saying that, on your video and you were talking about this, I did exactly that, but now it's useless. Of course, and you need to follow the new content, especially this year and last year. Information are so fluid, and the government are changing policies, updating principle of updating their grants and eligibilities, all of these all the time. So confusion is there, and make sure you take our information with grain of salt, and do not blindly follow. At least getting some professional consulting services under your belt, so that way, and you know what you're doing, right? All right, let's just go through this. My business get audited. How do you know you get audited? And especially when you get audited by the state. And is the state agency, the state auditors come knocking your door, goes, hey, you don't look too great, let me audit you. No, it doesn't happen that way, and you should get a letter. And you might realize that you got audited, you didn't even know, or you just have a habit of not opening up letters. And so when you go to register your car, and the state will say, you owe money, and you're not going to be able to do that. Or you need a license to do certain things, and they go, no, we can't give that to you because you owe taxes. You go like, why? I don't owe taxes. Of course you do. You got audited and you didn't answer, and so the assessment is out there. Now you have to backpedaling to fix your issue, right? So that happens a lot, and we see people ending up in that situation all the time. And the professional license could also be in jeopardy if you do not face your audit, and you don't even know you got audited. Next time you review your CPA license, and the state will say like, no, we can't renew your license, and you still owe money. So with that, and we want to talk about what are the content and what kind of audit a state can bring to you. So in United States of America, in this country, and the governments are largely by federal. The federal is the largest government body, right? Then you live in certain states, so the state is your governing body, government as well. And then of course you have county, you have city, and then you have a layers of government. But when we talk about businesses, most related to us are the federal audit, which is the 3 federal government agencies that we talked about last time in our webinar last Saturday. That is IRS, DOL, Department of Labor, and SBA is going to be very active. And so those are the 3 government at the federal level. And at the state level, you sort of have 3 kind of most common audit as well. Number 1 is the revenue audit, which is more like an income tax audit, income audit, right? The other one, the second one is sales and use tax audit. And then of course, the third one I want to tell you is the workforce. So it is unemployment insurance audit. So every state has a different abbreviations to it. But, if we just talk about unemployment insurance audit, that makes sense to you, right? Workforce is the one handling it here. Audit is the one handling it in Minnesota. So we have them all laid out. So here, so why you would get audited? Okay, we know there's three areas that a business could be audited. And why would you be audited? There's reason to it, because the most commonly found reason is, number one, is a mismatch of income. When I say mismatch of income is that you report sales tax. Let's say you're a restaurant, right? So you reported a bunch of sales tax throughout your month. So at the end of the year, say that your total sales tax submissions suggest that you should have $1 million sales, but your income tax to the state is end up with a 500,000. So those are income mismatch, and that would definitely trigger audit. With technology, the states are getting much better in terms of their system integrations. Every agency within the state are sharing information much more efficiently than in the past. And of course, there's also the state government, the state revenue also are looking at your deductions. Now, the deduction you have is an offsetting factor to the taxes they're going to get from you, right? The more deduction you do, the less income tax you pay. So they care about your expense. But if you are running a restaurant and you are claiming, $100 sales, you're claiming $90 on cost of goods sold, of course, that's gonna bring a red flag on your tax return. Then you will be audited, not only by the state and also by the federal. However, if you get audited by the federal government, and your state will automatically adjust your tax return anyway, based on the result of the federal government audit. So there are cases, I didn't really see those cases a lot, but so many years ago, I had one client get audited by the federal government, and for 3 years of business tax return. And almost at the tail end of that federal audit, the state also sent in notification that wanting to audit the business. So what happened is we went back to the state, explained to the state that we're still dealing with the federal audit. Once that is done, and you can reassess the audit, or if you want, we'll give you a copy of the federal government audit so you can assess your audit. So the state did not end up doing the audit. They simply accepted whatever we got out of the federal government. So see, on the income tax audit side, state and the federal are working very closely together. They most likely, they're not going to audit you twice on the same documentation. And even if they audit you twice, it was probably for different purposes. So if you got audited already by the state, then the federal comes to audit, then you can mention that to the federal government, saying that I got audited by the state, and I can give you the result of the audit and see whether you want to continue auditing me or not. So hopefully, I have not had that happen that way, but if that happened to you, I think you should communicate that so you don't get audited twice for both level of government, right? And excessive expenses is definitely a red flag. And the misclassification of employee is a huge reason for why you get audited, because remember the state also have unemployment insurance. So when you are paying people under contracting, obviously, and those people are not paying unemployment insurance like the employees would, so the state also like to offer people benefit when they don't have a job. So really is the effort of the state wanting to take care of the workforce, that when they are out of job, in the interim between jobs, they could claim unemployment benefit and still have a reason to have a reasonable lifestyle, right? So this is where they don't really want everybody to be subcontractors, because there would be no funding going into unemployment insurance. Of course, unemployment insurance also getting the state getting federal funds for that program. So that's why for your dollars you receive from the state for unemployment payment, there's a federal component in it. So it is not all state dollars, there's federal dollars too. So with that, and we knew that, okay, there's a lot of chance to be audited. Of course, whistleblower is another one. And for example, not recently and several years ago, and we would see a lot of unemployment benefit audit coming through because the contractors, when they work on the site, and some contractors, they hire subcontractors to work. Some contractors, they have an employee to work. So of course, the cost is not the same. So there may be some competitions going on the field. So some of the contractors are reporting the other contractors saying that, well, their people are all, non-documented. They are not paying taxes, and go after them. And I have heard that going on. So that raised a lot of audit, what I would call a targeted audit, right? Because they targeted on that particular whistleblowers information, and so to audit these type of people. So that is one of the reasons. And I would not underestimate that, because in the state environment, a whistleblower is actually one of the large reason why you will be audited. Targeted audit, the state already prepared to do that, so they do certain things to verify that, then to come in. For one good example would be that when we worked on a sales tax audit case for a restaurant, and the restaurant get audited for 3 years, 17, 18, 19. And we're already in the year of 2020, and they're auditing these 3 years. Okay, but the evidence the state auditor has is the state actually did sort of like a sting operation. They went into the restaurant, they paid cash for that lunch or dinner, I don't know, and so they have a receipt. And when they have this receipt back in 2016, 17, early years. So they come back in, they would want to see your POS system. And what they're looking for is that particular receipt, whether the cash is being reported. So this kind of audit, in my limited English, I call that targeted audit. Like they already knew they want to verify you for whatever reason. And then they come in and they have those proofs, they audit you, making sure that you're doing the right thing. So when you come across, when you have this kind of compliance going on, and for business to get audited, that's really normal. I mean, that is one way for, for businesses to level up, right? You really should not have discrepancies on that particular receipt. You really should have it reported. But if not, guess what? They will come back and say, well, you are taking cash away from the system. So here is another $500,000 sales that you didn't report. So the state would have liberty to give any number they wanted, because they had verified you didn't report that $5 cash receipts. Now, so, this is kind of, I covered that. Audit is normal. If you're in business, you better be prepared to be audited. So I really, sometimes you come across clients, they coming in, they're just paranoid because they're like, no, really scared, and they're, wanting to make sure everything is being checked, and wanting accountant to literally sleep in their store so they can do it right. And I mean, I don't really mind business owners to feel that way, because only when you are so on guard, when you are so aware of the guidance, then you will doing good. Because in the long run, if a business is really kind of cutting corners and doing those kind of things, you're just just like gambling, and you maybe lose a big time, but of course if you gamble right, no one come to you and you get through your statutory limitation time and you probably be okay. But to gamble that way, that's a huge risk. And I will tell you that maybe before pandemic, you can say that, well, you gamble, you won. I have no comments because people win and good luck and happy for you, you win. But the real reality is that now the business are saturated with government money. And when you have so much government money coming in, folks, I just want you to do one thing. You want to do it right. Please, you don't want to do anything like what you used to do. If you were one of those, and in my description, and just really make a change of heart. Start doing it right. And come to Community CPA. Get your accounting records in place, because we really don't want to see our folks and doing businesses and cutting corners and make some money, think they made some money. But when audit come around, nobody can save you. It doesn't matter how smart we are. And if the record is there, your accountant, your brilliant accountant could not do anything for you. But the most can just make sure the calculation is so accurate, you're not overpaying taxes by a penny. That's the most they can do, but they cannot write off those liabilities. And some of those liability, they cannot write off not because you really owe it. It is because we don't have proof for it. If you don't have proof, they think you made it. What are we going to do, right? So really be serious about this audit matter. That's why we put that in front of you, and we put this webinar again and again, because it is not fun when you get audited, you have nothing in place. Okay. Now, if your audit comes to you is really not fair, okay, and they audit you, they bombarded you with the audit, 1 year, 2 year, 3 year, then come back again. So, or here they audit you on sales tax, then they audit you on income tax, then you audit you on unemployment insurance. It's just like you feel unfair. I trust feelings. I trust business owners' feelings. If you feel that way, you know that there's ways to get that feeling justified. Sometimes we go up in the rank and we justify that feeling. Oh, we probably just didn't know that is how they're doing business anyway. Or we prove to ourselves that our feeling is absolutely correct. For whatever reason, you're being targeted. And if that is the case, and you have a way to voice that, but that doesn't take away the fact that you need to do your book right. Okay, so you have a manager of the auditor, you can voice your concern, and you have appeals you can go to. In the state level, you have appeals, and you also have an administrative judge and a court to go to cite the case. Okay, and ombudsman's office, state has that too. You can go to the watchdog office, tell the office that this agency is just not right. They're doing something wrong. I mean, your local public elected officers, officials are also your Congress person and your Senate, your state Senate, and those are the people you can go to voice your concern. Okay, so these are government-driven audit. And I want to just bring in one small concept on the side. They are self-triggered audit as well, which means you require a community CPA to come to your company to audit you. And then we come up with a report saying that based on our audit, your financial statement is presented fairly or not. So those are self-requested audit, maybe because your investor needed, maybe because your board of director needed, but that's different audit, right? I am talking about today, I am talking about the government initiated audit towards to business. So now let's look at the income tax audit. And I put together something I think is very useful. This is called statute of limitations. Okay. So we know that at the federal level, the statute of limitation, it is 3 years. So right now we are in May of 2021. So if a auditor write to you today, they're saying that, oh, I want to audit your business, and this auditor can audit you for the taxes you filed, right? And you probably didn't file 2020 yet because you filed extension, but they can audit you for 2019 and 2018. So if you file the 2020, it will be 18, 19, 2020, because that's a 3-year statutory limitation. So now let's talk about state income tax. What is the state limitation? Can they audit you for your lifetime or how long? So here I listed Minnesota. Minnesota, it is 3.5. So which means that today it is May of 2021. So the Minnesota state, they can audit your business for anything in 2020, 2019, 2018, and July to December of 2017. You're probably saying that, what do you mean by that half a year? Well, not all the businesses are going on the calendar year, right? So they could start it from July. So this is 3.5 for Minnesota. In California, it's 4 years. That means if we get audited by California revenue, today is May of 2021. They can audit you for 2020, 2019, 2018, and 2017. Iowa is 3 years. Income tax is 3 years. So like the federal, okay? And, Iowa is a state, obviously I live in Iowa for most of my time. And so I know Iowa really well, even though the community CPA is actually in different state as well. So Iowa, to me, if I want to use just one sentence to cover all the Iowa tax side of things, I would say that Iowa is one of those states really follows what the federal guideline is. So if the federal is 3-year limitation, you see, Iowa is going for 3 years. So that is where, if you don't know, and you're also too lazy to find out, and you can temporarily assume thinking in that way with Iowa, but not Minnesota and not California. So these two states are much more innovative. They're bigger, so they had a bigger government body. So there's more input from citizens in that state, though that kind of guided all the rules and regulations to be a little different away from the federal government. Not unheard of. It's actually pretty common. So how long can state collect on their income tax due from you? And remember, I said that in one of those webinars, I said that for the federal tax due you have 10 years statute of limitations, 10 years, which means if I filed my 2020 tax return on May 17, so I filed it on time, right? So say I owe $100,000, and if I just don't have money to pay, so I go on without paying this money, or didn't finish paying this money all the way to 2030, 10 years, that federal tax due will drop. So there is a 10-year window and for you to pay. And outside of that, over that time, your income tax due just sort of disappeared. A story I have is one of the client came over, and with the box of IRS letters didn't even open because he owes so much money. He owed about $50,000. I don't know it is much or not much. For some it's nothing. For some it's too much. So for him it's too much. So he was so paranoid and stressed, and he wants to kill himself, and he never opened up the box. And so he came to me and still terrified. and it's telling me that, I am really scared because I don't, these letters stopped, and I don't really, I'm afraid they're putting me in jail because I never paid, and I don't even open those letters, so I really don't know what's going on. And Ying, please, do you think you can make sure that I'm not going into jail? So I spent the rest of the hours opening up letters. So in the end, the conclusion is the statute of limitation expired, and so all of the money that he knew he owed to IRS is actually gone. That's why he doesn't get letters anymore, because he's done. And so I told him that, you know what, you don't have to pay anymore. He didn't believe me. So I told him to call IRS and ask whether you should still pay. And then I did not hear back from him since then. I'm pretty sure he's happily living a tax-free life, and he doesn't really need to pay that money anymore because it's expired. So for state, there is a limitation as well. So now let's look at these limitation. Most of the state mirror what the federal does. California and Illinois is 20 years, not 10, 20 years. Okay. And in Minnesota is 3.5 years from original due date or from the date you filed your return. So it is so important, folks, to file your return. If you don't file those the statute of limitation doesn't come in. Okay. And in Iowa, it's 3 years. Look, only if you file the tax return. So still, right? It's just important to file your tax return. So I think this is where the state income tax information, really important piece, I think, for you to know. Now, let's talk about sales tax. Sales tax and use tax is always coming into you together. So what is use tax? Just like the word suggested, if you use something, you bought something and you use it, but you didn't pay sales tax on it, that is, you should voluntarily report use tax for your state. So for example, and maybe you bought equipment from, online source, and you notice that equipment didn't charge you use tax, but you installed the equipment in your restaurant and you use it for cooking, and that equipment should pay use tax. So that is why when you get audited for sales tax, not only they want to see your POS system, they also want to see all your invoices on your balance sheet related to equipment, related to the asset part. And you're probably wondering, what do you mean? My asset don't even reduce income tax. Why would you care? They do, because those assets you put on your balance sheet in a restaurant business, you probably bought from China. And when you come through, you probably didn't pay use tax here for this state. So that is what they're looking. Of course, for sales tax, they want to make sure that you actually included all your sales in there. If they got a receipt showing that they bought $8 lunch with cash, and they couldn't find on your POS system, they would be making that $8 into $80,000 for you. So you would have to pay sales tax for it. So sales tax audit related to your POS system a lot, and for restaurant. But if you are not a restaurant and maybe your business is not subject to sales tax, so you don't have sales tax audit, but you would have a use tax audit. For example, law firms, right? They probably don't collect sales tax on you, but the law firms has computer and they buy things, and do they pay sales tax? They better do, because the state agency will come in. They don't look at their income, they look at their expense. Can you give me your expense folder? Yes, here it is. Then they go through the expense folder to make sure that every single purchase you have paid use tax for it. Okay. Now, we have a lot of questions coming in related to sales tax that is online retailer related. So I want to give you a simple concept here. So, just make that blurry, make that confusion a little cleared up a little bit. So, for example, there is a thing called $100,000 or 200 transactions. There's a thing called that in this online retailers. We call that economic nexus. Okay. What that means is if you are, say you open up a online portal, you're selling socks, but you live in Minnesota. So you, of course, do it underneath in your house in Minnesota in the basement. And you sell to all over the state. All right. So you say that, well, I sell all over the world. Fine. We're not talking about the world because whatever you sell outside of USA, it doesn't subject to the sales tax anyway. So it is only for USA. So now you sell the socks. The socks is only $1 a pair. I'm just going to make a very silly example. Okay. And the sales tax, whether you need to collect sales tax or not, it is depending on this. Let's say you are in Minnesota and you do sock sales to Iowa customer. That customer bought a $200, actually 100. No, for Iowa, let's say you're selling 200,000 socks, pair of socks. Of course you don't buy one socks, right? Oh, what am I talking about? This is Chinglish, I'm telling you. It's not really about socks. So you bought 200, you sold 200,000 pair of socks to residents in Iowa. And the socks is $1. So that's really little amount, right? But because you have the transaction, so you need to register in Iowa and pay sales tax. Okay, so this is where sales tax audit can easily happen for online retailers. And every state has a right to come in to request your transaction history and to know that where your shipping address is, and summarize all up for Iowa. Say I'm an Iowa auditor, I came to your basement, and I would look at the transaction numbers, goes, yep, you did 200,000 in 12 months time, so you need to register for sales. You register for sales tax, and then you should collect it, you should submit it. See, that is the requirement. So $100,000 or 200 transactions, it is the requirement for collecting sales tax, reporting it, remitting it. California goes for larger dollar amount. It is 500,000. Iowa goes for transaction only. Minnesota is different. It says that if you are 100 or more retail sales shipped to Minnesota. So they're talking about transaction, 100 or more retail sales shipped to Minnesota, or 10 or more retail sales totaling more than 100,000 to the state in the span of 12 consecutive months, you should register for sales tax in Minnesota and collect it, report it. See, it is really there. It is something that you really have to pay attention to. Otherwise, you will be called upon and to be audited. And on sales tax audit side, and how long can they audit? I did a quick search for you. And for California, and the longest year is 8 years. And for Iowa, it's 3 years. For Minnesota, the longest year is 6.5 years. Why is Minnesota always have this 0.5 things? It's so funny. So that's where you see the sales tax is different than the income tax, right? The last item I want to cover related to the state taxes is actually, this is called unemployment insurance audit, right? So this has a lot to do with the worker misclassification. So like I explained to you, you can easily understand the reason why the government is pushing business owners to pay people as they are your employees, not subcontractor. They really have to have the characteristic in order to be subcontractor. One of the important things for Minnesota is if you hire subcontractor, that person or that company must be registered as a subcontractor, have a subcontractor license in the state. Really important. Iowa wasn't asking for that many years ago. Now it has become a very advantage proof for the subcontractor to say that, yes, I am a subcontractor. Look, I registered in the state. So it is becoming that way. And so having said that, then other than the registration with the government to say that I'm a subcontractor, and you also need to pay unemployment insurance. As a subcontractor, you would pay that, right? You would pay that for yourself. You can elect it to not pay for yourself, but because you are a subcontractor, and so you will take care of your own insurance side of things. This is where it is worries the government, because if you got injured at work and you're not an employee, workers' comp doesn't cover you, and you go for unemployment benefit, it doesn't cover you because you didn't have salary, income, wages. So you yourself really need to take care of yourself in a lot of ways. So for that reason, the subcontractor really is under the development by the government to give more requirement on what they need to do. So now through the pandemic, you know that this is the first time the unemployment insurance agency like Audit and the workforce, they actually start accepting unemployment insurance even for subcontractor, remember? And that happened in the past. So that database with every state is not going to be underutilized. The state will develop means to take care of the a self-employed individual, because you are subcontractors and you're not covered by all of these things. So they will develop that, and more regulation going to come around. But right now, we want to tell you is when you are an employer, you cannot do your very best to not misclassify your employee. And I know in certain industry, most of the people who work for you is employee. For example, in restaurant, the cooks, the waiter, waitress, they're employees, okay? And you should not be innovative making them subcontractor. No, that doesn't work, because that industry, that's an industry norm. You should just treat them as employee. But in a construction company, it is really both ways. Some construction company have employees, they also have subcontractors. Those subcontractors, not only they take jobs from this company, they take jobs from other company as well. So you really want to make sure that you classify them properly. And if they're your employees, of course, they're under your control, they're using your tools, they're working based on your timeline, and they punch their clock and you pay them. So you pay unemployment insurance. So when you lay off and when the season is wrong, they go to unemployment insurance place, they can get money. Your employee will get money so they can have some support to go through the no jobless time, right? So here we listed for Minnesota unemployment insurance audit. And in this audit is always review your payroll related information. If you say, oh, I don't have payroll, then they ask you for subcontractor, and then it is a high chance for them to move subcontractor into employee and charge you for not paying unemployment insurance. So some people would say that, oh, that's not much, Ying, it's a little money, and we don't have problem to pay that. Just okay, fine. It's not fine, because those employee, you paid unemployment insurance maybe 3%, you're good, but you have to also pay Social Security, Medicare on the federal side because they're your employee now. So you haven't really paid that portion yet. That is a bigger percentage. That could mean penalty interest plus your Social Security, Medicare combined rate. So that could give you about 20% rate in there. And so for $100 subcontractor reclassified to be a salary person, you pay $3 on the state for unemployment benefit, but you turn around need to pay $20 for federal to come up with their payroll side of process, required taxes. So when they audit you, they need all kind of records. So I listed some of most common ones. They want to see your general ledger. You know why they want to see your general ledger if they just look at the workers? Because they want to see whether any of your payees are actually under person name. Maybe you have a bunch of cost of goods sold with somebody's name on it. Like you pay Ying for buying vegetables for you. So my name is showing up on cost of goods sold. That could potentially means I'm your subcontractor and you are not paying me as an employee, which would be totally wrong in the restaurant setting. All right. So this is the unemployment side of audit for Minnesota. And you asked me that how many years that would be, and there is 4 years, minimum 4 years. And it says record must be kept for 4 years. Their audit is minimum for 4 years. So they can go as much as possible. And in Iowa, I have not seen any limitation. I think 10 years, they can go as long as they think that you have been operating that way. And here is for California. So in California, it's called the EDD. And this is Employment Development Department. And it's also for unemployment insurance audit. So the idea is the same, but this is where they want to see that you're paying your worker above minimum wage or equal to minimum wage, and you pay them properly so they're not your subcontractors. And if they are subcontractor, they're probably registered. And so all of these are kind of is a pretty solid, already mature audit program in the state. So this is the form they often use for audit when you audited by California. So this gives us kind of an overview of the audit subject we have on the state. I have a few more slides that I just gonna go through that here. And I know you are looking at my YouTube channel. I just want to kind of make sure that I explain to you of the rest of the my slides here. I want to just emphasize on this. Whenever you get audited by the government, and if you have any reasons to believe the assessment is actually wrong. For example, you may be dealing with the state audit. They tell you that, I want you to submit the record in 2 weeks. 2 weeks come and you were calling all the vendors, trying to get records. They're not responding and it's just slow and you don't have a record on hand and you couldn't really support yourself. Then the auditors here wanting to close the case. If those things happen, you can always work with the manager of the auditor or the auditor themselves. And we have a really good experience working with auditors. And if we explain what we are doing, as long as we can explain that why it is taking time, normally it's okay. So it is not a drop dead a deadline, and normally they would work with you. So once your document is all in, and they will come up with assessments. Sometimes the folks got surprised by the final result. And I tell you that most of the surprise is actually not so much about the taxes, because once you get down to the end of it, you kind of know whether you owe or you don't owe. Mentally, you already prepared for that. What you did not prepare is actually the penalty and the interest come with it. It is just making it so much bigger than what you thought you owe. But if you really, you break down the total, you will see that the interest is calculated all the way to 4 years ago when you supposedly to submit, but you didn't pay. Now you still have the money. So it is like opportunity cost for the government. So they charge you interest. Those are can coming in really hurts. So that's one of the reasons why we say that it's just much better when you have a clean book and you know you're not going to be hit by all these penalties and interest, right? And then the other thing we want to say to you that you always have a place to get a final judgment. So at the state level, you have your manager for the audit. Then you also have what we call appeals. So you can go to appeals to not agree. And then after appeals, if it is still not working and you actually go through what we call administrative judge, administrative court, and where you have a chance to, to articulate your case to the judge and give your summary. And I mean, we have won the workforce audit with administrative judge, and we couldn't go through, the auditors assessed so much money and we don't think is right. So we appealed and we landed with the judge and with a whole day conference. It's not even face to face. It is just on the phone conference. I talk what I know, and the auditors talk about what they have, and then the end, and we, our client didn't end up paying anything. So, you can go through these process to win the case, to reduce your tax due. And let's say if all of that fails, and the tax due is yours, then you can set up installment. And for the state audit, folks, I'll tell you, if you owe state dollars, you need to set up installment agreement, because remember they are a statute of limitation for collection was kind of limited. Do you remember that slide? So you want to make sure that you set up installment with the state right away, because they are not going to drag on 3 years with you and then you end up not paying anything. So that's why the state want taxes to be paid faster. If you don't do that, the state is so close to home. They're going to what? They're going to ban your license. They're going to make you not able to drive. And you're just going to have some realistic and real issue. So you don't want to mess around with state. Just make sure that if you, at the end, you end up with paying, set up a payment agreement and pay installment and get that resolved. And say if you just really cannot do, and there's no way, and no money, business is bad, I'm closing my business, I'm bankrupt, and yeah, you can bankrupt income tax, but you cannot bankrupt what we call trust fund. For example, sales tax. Sales tax is the money you collected from client, you pay to the government. It's not your money to begin with. So you can't bankrupt that. That's what you owe. But income tax, you could bankrupt it. And so if you talk to the bankruptcy lawyers, and I don't have the most recent knowledge, but the cases that I come through and I learned, and you can bankrupt 3 years old income tax liability, as long as it is 3 years old. So don't quote me on that, and really check with your attorney, okay? Because I don't even deal with bankruptcy side of knowledge on the daily basis, and I just know cases that come through our office related to needing our tax document in order to go through the bankruptcy. So with that, I kind of shared with you some good insight. I think those are good information for you to have. If you are in trouble, if you are being audited, that's why you are showing up here. And at Community CPA, we work really hard for you. And I can only say we work hard for you because we go to every corner, we look at all your documents. We are not shortcutting what we can do for you. And that's the promise I can give to our folks. But if you just don't have anything and you just really did what you shouldn't do, Community CPA just cannot turn black to white, but we can make sure your every paper, even with coffee stains, if it is white, we make it white because that's what the true picture was, right? So it is really kind of our work spirit is just pretty much that we are fair, we are honest, and we help you with our compassion. So we're not going to look at you just one of our clients. We're looking at you knowing that you give your trust to us and you let us representing you and do have the most fair audit experience in your life. So that's how we see our clients working with us. And I hope you will never get audited. But if you do, you know that you have someone, some company that you can rely on. And it was really good talking to you. Talk to you again. I hope you liked my talk.